So there are 5 hidden fees that come with owning crypto, and they all eat into your profits, but hardly anyone knows these fees exist, and they start from the moment you first buy crypto, and they drain value all the way until you cash out. That's why in this video, I'm going to break down what these hidden fees are, but more importantly, how you can avoid them or at least reduce them so you can keep more of your money. Let's start with the first one, crypto exchange fees. When you first buy crypto, you probably use an exchange like Coinbase, Kraken, or Binance. But here's a catch, turning your cash into crypto isn't free. All these platforms charge various fees and they can quickly add up and eat into your profits. In fact, one of the main revenue drivers behind crypto exchanges are their fees. These fees kick in every time you buy, sell, or swap crypto, and they're based on things like your payment method, order size, which crypto you're trading, and even where you live. So whether you're just getting started or this is your 100th trade, a chunk of your money goes to the exchange, and let's be real, these fees are not cheap. On most exchanges, trading fees range from 0.1% to 4% of the total amount you're buying or selling. So let's say you buy $1,000 worth of Bitcoin, and the exchange charges a 1.85% fee. That means you're paying nearly $20 in fees and only getting $980 worth of Bitcoin. So right out of the gate, you're already down $20 just from buying crypto. And when you go to sell that crypto later, you get hit with another fee. In fact, selling fees are often even higher than buying fees. So depending on whether the value of your crypto went up, stayed the same, or even dropped in value, you could end up paying even more just to cash out. But the good news is there are some ways to reduce or even completely avoid these fees. First off, fees vary depending on what crypto exchange you're using, so it is worth shopping around for different crypto exchanges. A quick Google search can help you compare rates and find the most affordable option. I've used a bunch of exchanges over the last 5 years, and I've definitely learned which ones to avoid. I'll be straight up with you. One of the most popular crypto exchanges in the world, Coinbase, has some of the highest trading fees in the entire industry, but there are better options. For example, Crypto.com and my go-to, Kraken, generally have lower fees and are considered more beginner-friendly, at least when it comes to fees. Aside from shopping around for the most affordable exchange, another way to lower or even eliminate fees is to use the pro or advanced versions of the exchange. Most crypto exchanges offer a more advanced interface for experienced users with features like real-time order books, better charting tools, and most importantly, lower trading fees, or in some cases, no fees at all. Now, of course, there is a catch. Some of these pro versions charge a monthly subscription fee, but depending on how often you're trading and how much you're investing, it could save you money in the long run. Take Coinbase, for example. Their advanced plan called Coinbase One costs $30 a month, but if you're buying or selling more than $1,000 in crypto, those savings can add up fast, making it worth it even if you use it for just 1 month. On the other hand, if you don't want to pay a subscription at all, there are exchanges like Kraken which offer their pro version for free while still giving you lower fees than their regular platform, and that's one of the main reasons I enjoy Kraken so much. It's called Kraken Pro, and you just create a normal account on the normal Kraken exchange, and then you can use that same login to log into Kraken Pro. If you want to try it out, I'll leave my link down in the description for you. But the fees don't stop with the exchange. If you want to secure your crypto, then you need to transfer it to a cold wallet, which is separate from the exchange. This is where the second fee comes into play, blockchain fees. So most crypto exchanges won't charge you anything to send your crypto off of the exchange to your own wallet. However, each blockchain network where crypto lives have their own fees. That means when you send crypto from your exchange account to your own wallet, you have to pay a fee. This fee is ultimately determined by the network your crypto lives on and how busy that network is at the time of your transaction. And to be clear, this money doesn't necessarily go to a company, but it goes to individuals who are using their computers, also called validators or miners, who keep these networks running and secure. And every blockchain works a little differently. Bitcoin, Solana, Ethereum, XRP, they all work slightly differently, but they all charge some kind of network fee. That said, faster and more efficient networks like Solana have super cheap transfer fees ranging from 1 to 3 cents, versus less efficient networks like Bitcoin and Ethereum, where transfer fees can range upwards of $20 or more depending how busy the network is. But sending crypto isn't the only thing we do with our crypto when we have it in our own wallets. We also do things like use decentralized exchanges to swap crypto. We might stake our crypto. So anytime you interact with the blockchain, whether you're sending, swapping, staking, or anything else, you're going to pay some kind of blockchain fee. But there is good news. Once you move your crypto off of a crypto exchange, you don't have to pay those expensive exchange fees. You really just pay the blockchain fees, which are generally cheaper than the exchange fees. So if you're just buying crypto and then sending it to your cold wallet for safekeeping and you do nothing else with it, the only fee you'll pay is that initial transfer fee, at least until you want to cash it out and send it back to the crypto exchange. You'll have to pay that other transfer fee when you send it back to the crypto exchange. Also, just to clear up one common misconception, there are no fees to simply hold your crypto in a cold wallet. There's no like monthly or rent kind of fee that you have to pay. The only real cost of using a cold wallet is the initial purchase price, which generally ranges from $50 to $300. If you're serious about keeping your crypto safe, I'll drop a link in the description to a review of my favorite cold wallet that's also budget friendly. That said, this next hidden fee catches a lot of people off guard, mainly because it only applies to certain cryptocurrencies. To prevent spam or fake accounts, some blockchain networks charge a one-time fee called a rent or reserve fee. For example, when you send crypto to your own wallet, the network will hold back a small portion, meaning you'll end up with less than you send, and this is in addition to the normal network fee. The good news is that only a few blockchain networks charge a reserve fee, and the ones that do usually don't charge much. The most popular networks with the reserve fee or rent fee include Solana, XRP, XLM, and Algorand. Depending on the networks, this fee usually ranges from around 15 cents to a couple of dollars at most. But the real question is, do you get this reserve fee back? Technically, yes, some networks allow you to reclaim that fee with the click of a button, but other networks, you have to jump through a couple different hoops, which in my opinion is not really worth it. So I usually just chalk it up as a loss and just part of using that blockchain network. All right, this next hidden fee is a huge deal, and if you're not careful, it can cost you a ton of crypto, and in extreme cases, you could lose almost all of your crypto. It's called slippage. Slippage happens when the price you expect to get for a trade is different from the price you actually get. It's common when swapping crypto on decentralized exchanges. For example, when you submit a trade, the price can change between the time you place it and the time it gets processed, especially if the market is moving fast or the token has low liquidity. So if you try to swap $100 of crypto for another and there's not enough supply at that price, you might only get $90 worth, and the missing $10 is lost to slippage. But in extreme cases, slippage can cause you to lose over 50% of what you're trying to trade. So if you're swapping $100 of one crypto, you might only get $50 of the new token if you're not paying attention. The good news is that you can completely avoid this by reviewing the transaction before you confirm it, and most decentralized exchanges let you set a slippage limit, which is a maximum percentage you're willing to lose on a trade. And just to be clear, some slippage is totally normal and necessary when trading crypto, but if you set your slippage too low, the transaction might fail. Personally, I find that a 3% slippage rate is the sweet spot for most crypto swaps, but if you want to start lower, you can try something like 0.5% and slowly increase it if the transaction keeps failing. Another way to reduce slippage is to break your transactions into smaller chunks, so instead of trying to swap $1,000 all at once, try swapping $300 a few times. This helps by not putting too much pressure on the system that's handling the swap, called the liquidity pool, and the liquidity pool is kind of like a pot of crypto that the trade is pulling from. So the less crypto you pull from it, the less likely the price is to change when you're doing your swap. This next hidden fee is super controversial, and it really depends on where you live, but it's very important to talk about, and that is crypto taxes. If you've ever swapped one crypto for another or cashed out your crypto to fiat, that's considered a taxable event, at least here in the US where I'm at. In my case, if I make money on a trade, that profit is considered a capital gain and I owe taxes on it. On the other hand, if I lose money, then I can offset any of my gains with those losses. Also, your tax rate depends on how long you've held your crypto before you sell or trade it. If you hold it for more than 1 year, it's considered a long-term capital gain, which is usually taxed at a lower rate. But if you sell in less than a year, it's a short-term capital gain, and you'll be taxed at a higher rate, basically like regular income. Again, this is mainly for the US. I'm not aware of all the other countries and how they work. So if you've got diamond hands, then holding your crypto long-term could actually save you money come tax season. Now, the exact rates change every year, and it also depends on your total household income, but in general, you can expect to pay anywhere from 0% up to 20% on your crypto profits. And of course, just like anything, this is all subject to change, and it's worth talking to a tax professional, which I am not, if you have any questions or concerns about your crypto taxes. Now, technically, this last one isn't a fee, but it could be the most expensive mistake you make in crypto, and that that is not knowing how to effectively manage and secure your crypto. If you want to avoid potentially getting hacked and losing everything, check out this next video where I share some of my best crypto security tips. God bless. Peace out.